Okay everyone, welcome back to the Price Action Labs YouTube channel. So here we're going to be going over how to master my New York entry model, right? Using both order flow and ICT concepts, right? So if you're trading the New York session or the London session, what's important to understand is that each of these sessions have a different role to play. So if you're an ES or an S&P 500 futures trader, this video is going to be for you. Also, if you trade US options or UK options, any market that's futures, even Forex in the London and New York session, we're going to be going over how you can use order flow to master your entry trades, right? So the learning objectives for this particular video are going to be, so ES futures, right? Trade recap. We're going to be mastering at the London and the Asian session to help you trade the New York session. Why a pre-market game plan is so important, why using the 8:30 a.m. Eastern Standard Time is a great particular time in the markets, especially if you're a New York trader, to use to your advantage, mastering your entry models in the New York session, determining how to use the Asian and the London session to help determine your entries in terms of liquidity and where big players are getting in and out of the markets, and overall improving your psychology as a New York trader. So first we need to understand, why is the London and Asian session so important, right? So the Asian session builds liquidity. So if you look over here on the screen, what you can see here is the Asian session in orange. So the Asian session is from 8 p.m. to New York midnight opening price, right? So 8 p.m. to New York midnight, right, which is the opening price. The London session you can see here in blue typically was a range, and this is going to be very important. Then we see the pre-New York session. So pre-New York session is an hour before the New York opening time, or when the S&P 500 opens, which is at 9:30 a.m. Eastern Standard Time. So 8:30 to 9:30 a.m. is a very critical time if you're making a pre-market game plan. So why is the London session so important? So why do you as a New York trader need the London session? So the London session will often sweep liquidity, right? But when the London session leaves some Asian liquidity on the table, this is important. So later on in the trading in the case study, we're going to be going over how you can use this. And basically what's going on is that the London session doesn't actually sweep the Asian low, and neither does the opening, the 1 hour before the New York session, right? Before the 9:30 a.m. Eastern, we see an aggressive wick, but the Asian low has remained intact. This is basically a target, right? So why is the pre-market game plan important? So in the private community, I actually made a pre-market game plan just over here. So my pre-market game plan is something I make around 9 to 9:30 Eastern, right? So 9:30 a.m. Eastern. So the pre-market game plan is a very important part of the overall market trading, right? So a pre-market game plan is important because you need to understand exactly what you're looking for in the markets, right? So the S&P 500 game plan is as follows. If we take a look at this chart over here on Friday, right, what you can see, what I want traders to understand is that we had a 4-hour fair value gap over here, this large rectangle. So it's the candle before the fair value gap, which is my point of interest. However, we have a fair value gap resting above. So for those who are watching this video before the 12th of May 2025, this is the next target I'm looking for on the ES or the S&P 500, the next fair value gap above current price. But having a pre-market game plan is very important because it gives you the confidence to go into the market and know what you're looking for. So if we look at this, right, so on the 4-hour time frame, price will be most likely to reach the PY. Now it's important to understand this pre-market game plan of going up bullish was actually wrong because the market gave us a short position. So having a pre-market game plan doesn't guarantee that your direction is going to be right. It's more of a way of understanding where the market is going to gravitate towards, right? So if we go to the 15-minute time frame, right, a pre-market game plan is very simple. So if we go to the 15-minute time frame, let's actually look at it on the ATAS platform, right? So on the ATAS platform, I'm looking for the bearish upper fair value gap and the 15-minute fair value gap down here. So as you can see here, price respects this 15-minute fair value gap resting over here in this region. And we also had a 15-minute fair value gap over here. So this was my key level on ES. So when you have a 15-minute fair value gap, that is essentially your level. So a pre-market game plan is very important because you typically want to be keeping an eye in the New York opening session. You want to be keeping an eye on one 15-minute fair value gap, or maybe two 15-minute fair value gaps that price is likely to react from. All right, so I circled this zone. This was around, if you look at this, around 15 or 12 minutes into the session. I'm looking for price and how it behaves at this particular region. Now, with that being said, if we now go down to the 15-minute time frame, right? So let's take a look at our PowerPoint, right? So when you form a pre-market game plan, you're typically looking at where 15-minute fair value gaps have occurred. So using a pre-market game plan is advantageous because it shows you where you want to be entering and where you want to be exiting. So essentially, this is what the pre-market game plan looked like. We have a 15-minute fair value gap. We can see the Asian range hasn't been swept in the London session. So at a 15-minute fair value gap, price can either go up or price can either go down. And this is where the order flow becomes very important, right? So if you want to improve your psychology as a trader, right, it's an ongoing battle, right? Your psychology always needs work. And there's two things you can do to improve your psychology over time is to journal not only where you go wrong, but where you go right. So you can double down on what's going right and you can eliminate what's going wrong. And risk management will allow you to stay in the game long enough for your journal to actually come into fruition. But psychology means nothing. It means nothing if you don't have an edge, and an edge comes from knowing who's in control, right? So with that being said, let's dive in. Okay, so here we have the ES or the S&P 500 futures, and we're going to be looking at the New York session just before the 9:30 a.m. Eastern. So if you're in New York, then the S&P 500 opens at 9:30 a.m. Eastern, right? So we are looking at the 9:30 a.m. Eastern. Now, straight away, just to mark this chart up, we had a fair value gap. So this was the fair value gap itself. And I'm just marking the candle before the fair value gap. So this is our point of interest. So notice how ES respected this POI pretty much perfectly, right? So we saw price respecting this POI. In fact, when we go over now to the ATAS platform, right? If we just go to the ATAS platform, what we saw over here, interestingly enough, was if we go to the same wick, when we analyze this wick, right? So this wick is exactly what you see just over here, the wick which I've circled over there, right? But when you look into this wick, you can see a lot of positive delta. We see 21 for 174, we see 24 for 134. We see a lot of zeros at the top. So when you see a lot of zeros and you see positive delta, what that means is that there's more aggressive buyers than aggressive sellers. So when you go back to a candlestick chart, the way you want to understand this, if we go to a 5-minute chart, is that we actually had a lot of aggressive buyers in this particular area. So you want to ask yourself, if you see a lot of aggressive buyers hitting the ask, but none of them get rewarded, right? You want to understand what's going on in this zone, right? So here we see a lot of aggressive buyers. So we see this in the positive delta. So understanding what's going on 1 hour before the New York session is very important to understand, right? So you see a positive delta. This means that there's basically more aggressive buyers. So you want to ask yourself, if we see a lot of aggressive buyers, right, but the market failed to break above this area, what does that tell you about the area? So again, we see a lot of aggressive buyers, right? These buyers are present all throughout this candle, right? So aggressive buyers that are not being rewarded simply means that passive sellers are at this zone. So this zone is being supported by passive sellers, right? So one thing to understand as basic knowledge is that passive sellers drive price lower and passive buyers drive price higher. So where you see passive participants in the market, this simply means that those participants are in control. So we know that passive sellers are at this area, and therefore we know sellers are in control, right? The aggressive buyers going in with market orders, live market orders, are essentially failing, right? So passive sellers are in, more importantly, they are in control, right? Mind my spelling there. Passive sellers are in control. So now we have a 15-minute fair value gap. What we need to understand is there's only two things that can happen inside of the 15-minute fair value gap. Price can either move up or price can either move down. So if we just take a look at now, we're into market open and we're going to be analyzing price near this particular zone, right? So what we can see is we can see how price has. So from here, we need to understand what's going on in terms of price, right? So price in itself, let's go to the 1-minute time frame. Price in itself has come back into this particular area, right? So now from here, we're going to be marking out. We have a 1-minute POI over here. Now, this is a 1-minute POI because we've left a fair value gap just over here, right? So this is now a 1-minute point of interest. Now, we've also left a 1-minute fair value gap down here as well, right? So this here is also a 1-minute POI, right? Notice how we're all within inside of this 15-minute fair value gap. So this is where price gets very interesting. We're going to be going on the ATAS platform. We are going to be understanding what's going on here, what's going on here, and then also what's going on here. So we have 3 places to target, right? Place number 1, place number 2, and then of course place number 3. And this is where the ATAS platform is going to help us, right? So if we just go back to Discord where the trades were taken, again, what's going on over here is this price action here, you can see over here, this price action is the exact same on the 5-minute chart as this price action. This is the 1 minute and this is the 5-minute. So let's start by understanding what's going on up here. So this is, let's start by seeing what's going on down here. So this here is step number 1, right? So this here, there's a lot of negative delta, right? We see a lot of negative delta. In fact, when we zoom into the candles, we can see 410 for 190, we see 142 for 0. But the market was able to find some strength and move higher. So when you see aggressive sellers, more aggressive sellers at this area, right? When we read the numbers, we see 384, we see 335, 172. We see a lot of red delta, we see a lot of negative delta. This negative delta means that there's more aggressive sellers than aggressive buyers. Not more sellers than buyers, more aggressive sellers than aggressive buyers. This means that there are passive buyers sitting in this area. They're passive buyers sitting in this area. So we know that there's passive buyers sitting over here. So we're just going to label that because these aggressive sellers were not rewarded. So therefore there's passive buyers that have propped the market higher, right? There's passive buyers sitting over here. Now that price comes into number 2, you want to ask yourself what was going on at number 2, right? We see number 2 over here. Again, we see tons of aggressive buyers, 206 for 516. We see 13 for 109. So we're seeing a lot of blue delta. We're seeing more aggressive buyers than aggressive sellers, right? The same thing we saw previously coming into this fair value gap, right? We see 0 for 246. We see 77 for 187. So we see a lot of blue delta, right? Blue delta means that there's aggressive buyers in this area, right? We see a lot of aggressive buyers. So what's going on now? We can see the market actually held this area and was unable to really break past this area. So what's going on over here is that we have aggressive buyers that have failed. So now there's passive sellers. So right now in the markets, I was basically staying cash, right? I took one break even at this point. So if we just go to the trades itself, I took a break even over here, not anything crazy, because I also rushed into a trade. I was FOMOing in the New York session, right? I took a buy trade round about here, got out a break even. So what was going on over here is price was struggling to break above this area. So those aggressive buyers were failing. So now when we come into the zone, right, this was the first trade I took. Notice how my entry was slightly off over here. This trade banked just under $200, time of entry $127. So what was going on was that this trade here was taken slightly after I should have ended. So my entry wasn't perfect. You should have seen my entry should have been near the zone over here, right? So let's break down why this entry was valid, right? So it does come down to basic order flow, right? So what was going on is you need to understand what was going on at the key level, right? And it all comes down to using this particular chart over here. So what was going on is we saw a lot of aggressive sellers here and a lot of aggressive sellers here, right? But the market still moved higher. So there were more passive buyers than aggressive sellers. But when we go back to this zone and understand what was going on, right? Let's just kind of see what was going on. Now from here, we're at an interesting area. Number 3 is an interesting area. The reason for that is because these passive buyers failed, right? They failed to hold the level. So what's going on here is that sellers won. And the reason why sellers won is because here the passive buyers failed, right? So if I just kind of put that in red, these previous passive buyers did not show up, right? Also, there were lots of aggressive buyers here. They also failed, which meant that sellers were in control, buyers failed, right? So buyers failed over here, sellers won here, sellers won here. And this is the reason, folks, the market moves down in the New York session or in any session, right? It's because you need to understand what's going on between buyers and sellers. So we know that buyers have failed and sellers are in control, right? And this is the reason why this was a valid trade, right? So this is the trade I would have taken. A good entry would have been here. I took my entry slightly lower than the zone, but this is where sellers essentially failed, right? So this is the trade you could have taken, right? Stop loss just above these wicks. And the next question is, in the New York session, where do you target, right? Targets are obviously very important, right? So where do you target as a trader? So remember how I said at the start of the session how the New York low was left intact? So this low over here is basically the target. Okay, so that will now give you a 1 to 3 risk reward, 1 to 2.97, right? 1 to 3 risk reward. So if we just go down to the 1 minute time frame and see how this played out, price eventually did melt to the downside, right? So when you're taking trades like this, these medium risk reward trades, what you need to understand, if we break this trade down, is you need to understand a couple of things, right? From this particular trade, you need to understand when price comes into a level, there's only a few things that can happen at the level, right? Price can either break above or price can either break below. So we can either see price breaking above or we can either see price basically coming back in and breaking below, right? So let's quickly draw this on. You can see price breaking below like this. And so what is going on here in this case is that we saw these buyers previously fail and we saw buyers failing up here. So sellers are basically in control, because if aggressive buyers fail and passive buyers fail, that means that you should be taking sell positions. And that's exactly what happened over here on the ATAS platform, right? So on the ATAS platform, I'm looking for buyers to fail. I'm looking for these passive buyers to fail. And when these passive buyers fail over here, right? So if we go back to the candlestick chart, when these passive buyers fail over here and over here, that's what gives us the sell position.